Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleague Sonia, and we got Mangalam joining us today. Mangalam, hi. Sonia, hi.
Morning. Hi, morning.
Finally, the last week of this year, right? The last week of 2022, and we're here.
So. You're looking at the macros. It's the first day of the week as well. So let's look at the macros.
What a year it's been, right? I mean, good, bad, ugly. It's all happened this year. But by and large, not been too bad. Even from an India standpoint, I mean, it's like, what do they call it? The cleanest shirt in an otherwise dirty laundry basket.
Absolutely. I mean, let me just quickly tell you, we're coming off, I mean, it's pretty sort of a troubled picture as we wrap this year up, right? I mean, a gloomy market in an otherwise cheerful kind of phase of the year, which is the end of the year, right? Friday saw absolutely, I mean, it was a smackdown. No other way to put it. The Nifty was down on your screen. The mid-cap and small-cap, of course, I mean, the sell-offs were much worse. 4% on the, 4.5% on the small-cap. The mid-cap was down 4%. So this is as bad as it gets, right? At least from a single-day perspective, relative to what we've experienced. And the market, I mean, market participants, no one is really used to this kind of a market anymore, not been used to it since the corrections that we saw prior to June. After that, it's been basically mostly by the dip and the market moving higher. Last, from the recent highs, and this is, I think, puts the entire picture in some perspective, these are the changes. Nifty is down 6%. The Nifty Bank is down about 6%. Mid-cap index and small-cap indices are now, from their recent highs, down about 9% and 10% respectively. So these are now turning out to be decently large kind of corrections. These are not 2-3% corrections from the recent highs. And this is just, what, 7-8 days worth of data between 6 and 10% falls. Broader markets, I think, is what is even more interesting. So I just ran a screen on NSE 500 stocks, and only 30 stocks over the last 7 days, which is from the highs of December 14th, are actually higher. Only 30 stocks, which means, 95% of stocks are lower in varying degrees. As you can see, I've kind of marked out what is down more. About 12 stocks are down more than 20%. 145 stocks are down between 10 and 20, and so on and so forth. But, only 30 are actually higher in a 7-day period out of 500 stocks, and that is 95% of the overall market capitalization. Let's just quickly run you through how things are looking, and I think this is where there's still a fair bit of confusion. I just want to make this point. Over the last 7 days, right, and this is from the 14th of December, this was the swing high which the market made, and then the market started falling aggressively. This is institutional figures. FIs have sold 3,300 crores. Locals have bought 11,330 crores. So it's not as if there has been some, immense amount of institutional selling. That is point number one. Institutions have not sold very aggressively. This largely seems like, especially, what you could see on the screen on Thursday and Friday, selling coming in from HNIs, retail investors, more HNIs than retail even, I would say. Bulk of the selling seems to be coming from those two segments. The reasons, I mean, even by 3:30, and we were speaking with market participants, if there is one trigger to kind of, cause the market to drop the way it did on Friday, I mean, people were still scratching their heads, and I guess they still are. But I reckon mix of COVID fear, spillover from China, etc., and pullback from overheated levels perhaps are basic kind of reasons. I would say that the market in the very near term is looking a bit oversold. In the very near term, momentum is to the downside, and these things can run for a bit longer. But in the very near term, I would say perhaps you should expect a bit of a break in this downward momentum that we are seeing. You look at simple things. You look at the Nifty RSI, which is at 32. You get to 25-ish, 30-ish kind of levels, that becomes clear oversold. Mid-cap and small-cap index RSI is around 28, which is, I mean, practically there in the oversold kind of territory. If you do, and I think, after the kind of purge that we saw on Friday, you would have things like margin calls, etc. I mean, brokers making calls, asking clients to put up more margins. So I think by about maybe, after the first hour, 2 hours or so, after the market has digested the leftover from Friday's action, they perhaps, I mean, could be some stability which starts to kick in. But if there is to be a bounce, I think Friday's high of 18,050 becomes the first level which the market needs to cross. If you are able to take that out, then you've got two levels, 18,130 and 18,237. These are slightly further away. These are nothing but 38 and 50% retracements of the fall from the swing high of December 14th to Friday's low. So 18,050, Friday's high, then 18,130. Just remember those two numbers. These are the first two levels to get past. Structurally, right, I mean, and this is the point that many are making, the Nifty closed below a long-term moving average, which is the 20-week moving average, which to many kind of spoils the structure, right? This is up and up kind of a market that we've been having, buy the dips kind of market. So, if downsides were to emerge after some stability, some bounce, the level to watch is 17,565. This 7,565 is still some distance away, but that is the retracement of the entire rise from 16,747 to 18,887, which is the all-time high. I mean, it's a clean kind of sort of trend line which got broken. The entire retracement, 61.8% retracement, comes to 17,565. That is the retracement. Bank Nifty, I mean, I won't go into details. We can talk more about this, but Bank Nifty has support set the 20-week moving average, which is at 40,825. I'm not going deeper because hopefully, just hopefully, we should have some stability at least for a while before the market decides to do what it wants to do more. So that's the sort of brief point, the setup as I see it. Sonia, hi. Mangalam, hi.
Hi, morning. By the way, all markets are shut today, right?
Yeah.
So the US, UK, Singapore, Malaysia, Hong Kong. So you take your pick. That market is closed, Prashant. Not working for 24 hours. Long weekend. Okay. Well, but for our own markets, I mean, as you said, right, it's the last trading week of the year. And if you put together all the data of this year, there is still a degree of outperformance that India has seen compared to global peers. That's, of course, just the Nifty performance, but Nifty in dollar terms is down about 8%. That's not much compared to most of the global peers, which are down anywhere, 10 to 15 to even 20% is what the S&P is clocking as we speak. So in that context, despite the brutal sell-off that we saw on Friday, the Nifty is still seeing a big degree of outperformance. Now, the Nifty itself is down for the fourth straight day. So as we said, perhaps there could be some arresting of the selling pressure. The big question on my mind is that after breaching the 20, 50 and 100 DMA, will the Nifty be able to find support at the 200-day moving average, which is 17,185? So that is a crucial line in the sand for me on the downside. Of course, there was large buying from domestic institutions on Friday, so I guess that's the saving grace. DI has bought almost about 3,400 crores. And the next big trigger for this market, of course, will start from the 12th of Jan when you have all the earnings coming through, HCL Tech, Infi, Wipro, HDFC Bank, ICICI Bank. So that'll be, the big trigger that will perhaps be deciding factor for the markets. But after the kind of brutal sell-off we saw on Friday, maybe it could find its feet. But let's see, that 17,180 is what I'm watching closely on the downside. What about you?
I'm watching a couple of things, Importantly, if someone asked me, how did the market fall? I'd first say slowly and then suddenly, because that's what happened, right? From the highs, from the all-time highs, the Nifty is down 1,100 points odd. 667 points of those, roughly 70%, came in just the last 2.5 trading sessions. From December 21st high, the Nifty has fallen about 700 points. The advanced decline ratio on Friday was something that stood out for me. From, the word go, we saw weakness in the broader markets. 14 stocks declined for every stock that was advancing. The FIS captured that. While, it does not capture in the cash market action, they captured it in the F&O space. I mean, the start of the series, they were long to the tune of 77%. Start of last week, they were still long, 59%, and that has fallen to 44%. And the other data point that really stands out is the way they've sold calls. On Friday's trading session itself, for this expiry week, they've sold 1.4 lakh calls, and this compares with just around 73,000 puts that they've sold. So every move on the upside is likely to face some resistance. I mean, just to put some more color into this call selling, the 18,000 call added around 81 lakh shares in open interest, 18,100 call added about 53 lakh shares in open interest, and 18,200 call added about 30 lakh shares in open interest. So together, between 18,000 and 18,200 calls, we've seen 1.5 lakh shares, 1.5 crore shares being written in open interest. And what do put writers have? Usually the bulls write the puts. What do put writers have? 17,800 put. Among the top 10 active options, this is the only put which has 15 lakh puts written. So basically, bulls are, underperforming the bears in terms of writing options by a factor of 1:10. Between 18,000 and 18,200, we have 1.5 crore calls written, and 17,800 put has just around 15 lakh puts written. The put call ratio at 0.72. Prashant said that, the RSI, etc., indicates oversold zone. Put call ratio, when it's between 0.7 to 0.75, also indicates that there could be a bit of a bounce in the cards. But then again, the question is whether that will face a fair amount of resistance, because again, Sonia pointed out it's below the 20, 50, 100-day moving average for the Nifty, below the 20 and 50-day moving average for the Nifty Bank. And while 17,185 is the simple moving average for 200 days on the Nifty, the exponential moving average, which takes into account more recent data as well, that comes in a little higher at 17,423. So that is something I'll be watching out on the Nifty. And Prashant spoke about the 20-week moving average on the Nifty Bank, which is around 40,800 thereabouts. You know, that ties in with a 100-day exponential moving average on the Nifty Bank as well. The two big triggers for this week: first one, like you said, most markets in the world are shut, so low institutional volumes. And secondly, there could be a fair amount of volatility because it is December series expiry. So those are a bunch of things that I'll be watching.
Okay, well, long day ahead and long week ahead. It's the last full trading week of the year before we head into New Year celebrations. So before we start, let's tell you what's lined up in the first hour of the show. Today, we'll get you updates from the markets across the globe, and Vipin Khare of William O'Neill will be with us to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day, so do stick around for that. At around 8:30 a.m., we'll do fundamental stock analysis with Prakash Diwan on all that's happened, not just in the week gone by, but in the weeks to come. And post that at 8:45, we bring you the top stock picks for the day from our technical experts. So do stay tuned in for that as well. F&O experts coming through too. At 9 a.m., there's D Street setup. So Anand Singhal will join in for a quick trade setup. Following that, Prashant will bring you the Market Laser, a segment where we analyze stocks and sectors through a technical lens. And before the market opens, in CNBC-TV18 Stock Board, we will highlight the top news to focus on for the day. So you don't want to miss all this in the next 2.5 hours on Bazaar Morning Call. Of course, we begin with the first equity call of the day. So that's the first opinion as you kickstart trade. Sanjeev Prasad of Kotak Institutional Equities notes a wide array of domestic and global factors creating unseasonal gloom in equity markets. He says these include a sudden decline in discretionary consumption in India, continued strong economic data in the US, which bodes ill for US interest rate outlook, jump in COVID-19 cases in China, large uncertainty around China's response, and surprising shift in the Bank of Japan policy. He says it's hard to form a coherent investment strategy given large uncertainties in multiple variables.
Okay, let's get you some money market views as well. This is B. Prasanna of ICICI Bank, who says the Bank of Japan pivot of widening the yield curve control band triggered appreciation of the Japanese yen across the board. He says the dollar was supported against other currencies owing to risk aversion and better than expected economic data. Goes on to add, rupee, which was under pressure from persistent hedging by offshore participants, is expected to continue to trade in a range of between 82.1 to 83.1 to a dollar this week.
All right, and on the bonds, B. Prasanna says global yields hardened during the week due to the hawkish pivot from the Bank of Japan tweaking the yield curve control. He says domestic yields also drifted higher as MPC minutes continued heightened focus on inflation. He expects the 10-year benchmark bond yield to trade in a range of 7.2 to 7.4% with an upward bias coming through.
Right, we also have a lot of stock-specific action to track. Today, we'll get to the top 10 in just a bit, but we'll tell you what we're looking at. Suven Pharma, Alchem Laboratories, Godrej Properties, Tata Motors, Shriram Transport Finance, Welspun Corp, SJVN, and Restaurant Brands Asia, all of them on top of our radar on the back of positive news flow, whereas we'll watch out for United Breweries and Quest Corp as well, stocks which are likely to open in the red on account of negative news flow that is backing them.
Vipin Khare is joining us now. He's Director of Research at William O'Neill. Vipin, great to have you with us here. Good morning. Thanks very much for your time. I don't know if you've been tracking India closely and the kind of price action we saw over Thursday and Friday, but what did you make of it if you were watching the screen? And what next in the very near term?
Good morning, Prashant. I think you summarized it pretty well. Most of the moving averages have been kind of broken. Volumes have moved up. I think the next 4-5% move is likely to be critical for the markets. Not only the move or the support, but I think how volumes play out. So if you see the markets drifting lower on higher volumes, then I think that is something to kind of watch out for. For us, every 0.2% move on the downside with volumes higher than the previous day is something we take note of. It doesn't happen very often, maybe twice or thrice in a month. But if that kind of bunches up, then that is a signal that markets are kind of turning cautious. So yes, it's been kind of sharp turnaround, but I think we'll get more indicators on what the market is likely to see based on how the next 4 or 5 percentage point move plays out. I mean, I just hope if it drips lower, the volumes are not as significant, because fall on high volumes is something we kind of really take very seriously.
Okay. Vipin, hi, good morning and greetings of the season to you and your entire team and William O'Neill. If the market does extend the downside, where do you see the leadership emerge on the downside? Will it come from banks, IT, Reliance? What are you looking at?
Yeah, so I think the market has already over the last month or so indicated where the interest is moving. Banks and financial services, some of the insurance plays, that is one place that has done well. Capital goods and defense stocks, they have kind of really turned around. They were places where value was emerging. And some of the consumer staple plays, these are the things that are kind of holding up well, or the setup looks good. Outside of that, if you look at the sector indices for India, most of the sector indices are either in correction or are under pressure. Nothing significant that stands out in terms of the sector being in an uptrend. So we'll look out for leaders in these limited groups. I think there's a lot to play here. Capital goods, defense, consumer names, banks, financial services, insurance. I think these will be the ones that will help lead the market out of this correction if they hold up.
Right. One of the themes of last year was the PSU banks. The index, give and take, everything is still up almost 56 odd percent. Having said that, in just the last couple of weeks, it's corrected about 16% from the highs at an index level. A lot of individual stocks down by almost 20, 25 odd percent as well. Do you think that cyclical moves that we see on PSU banks is now over, or maybe this dip should be bought into?
So I think we'll wait for individual stocks to stabilize and give us some indicators before trying to preempt whether the dip should be bought into, because some of the PSU banks, the correction has been kind of pretty sharp over the last week or so. But it is interesting that you brought up PSU banks, because PSU stocks is one theme that has kind of really emerged over the last few months. There are some of the PSU stocks, even outside of banks, that trade below book value, that are kind of improving cash flows, reducing their debt, strengthening the balance sheet. Management is getting more investor savvy. So I think this is one area, even outside of banks, where there is a lot of value. And if those companies can really just deliver what investors would like to see in terms of numbers or messaging, a lot of these places will be good places to hide if the market kind of turns volatile.
So you said that capital goods, defense are pockets that have started to perform now. But would you suggest staying away from the broader market for a bit, in India particularly, because of, just how vulnerable it's become now? I mean, the sell-off on Friday was pretty brutal. So even if you're looking at these pockets, is it better to just stick to the large caps now for a while?
Yeah, I think India is not doing anything dramatically different from the global markets. We look at 30, 40 markets worldwide. Most of the markets are either in an uptrend, under pressure, or correction. India has relatively held up really well. So yeah, as the market kind of catches up, gives up some of its outperformance, it'll be wise to either stick to leaders, the large caps, or just see the price volume action. That will kind of tell you where it is headed. I would not just go and buy the dip and preempt what the market will do, because next year could be pretty tricky. And a lot of what India does will be dependent on what global markets do. So be very specific, pick your stocks, do the due diligence, and then let the price volume action guide you. If they find support, if the setups look nice, then don't go all in. Just throw in a bid, throw in a hook, see how it performs. If it picks up, then increase your exposure. Otherwise, just come out. I think people will have to be really nimble, and they will have to be really flexible in terms of their picks or their exposure, because this is not a market where you will see a unidirectional move.
All right.
be nimble and flexible. Well, that's good advice not only for the stock markets but life as well. Wish you a very happy new year, your team as well. Thank you so much for joining in. With that, we'll take a short break. On the other side, we will get you our promised top 10 list of stocks. Stay tuned.
Welcome back to Bazaar Morning Call. Well, we kickstart the last trading week of 2022. Guess what? Most markets are shut for Christmas. So the queues are very limited in terms of, at least global queues are low. People are on a holiday. Let's see. For now, the SGX Nifty is up about 80 points, but it was a brutal sell-off that we saw on Friday. First up, let's talk about Suven Pharma. It's going to be in the news. Ekta is here to tell us the latest on that. Ekta, over to you.
Thanks for that. Well, Nisha has been actually covering this story in the past couple of months and has been indicating that Suven Pharma is definitely on the block, and that's the deal which has really taken place. Advent is going to be acquiring significant stake in Suven Pharma from the Jasti family. Advent will also be making an open offer to acquire an additional 26%. Advent, post the acquisition, intends to explore a merger of its portfolio, Cohance Life, with Suven. The aim is to basically build a leading end-to-end CDMO and merchant API player. So this is going to be a deal where, in fact, they will be taking majority stake within the promoter holding. The promoters hold around 60% of Suven Pharma. And if you just do a back of the hand calculation, the overall stake comes to a value of over 7,000 odd crores. They haven't really indicated how much they will be acquiring in terms of percentage, etc. We don't know the granular details. We will wait by for that. But nonetheless, the street was really anticipating for this deal to come through and had already sniffed it out. So while the stock will be in the green, the upside could possibly at some point in time be limited because the news of the deal was out for quite a while.
Take that point, Ekta. Thanks a lot for that. And shortly, we'll be joined by the management of Suven Pharma as well. So we will put forth to them the granular details that the street is still awaiting. With that, we'll go across to Surabhi, who's watching United Breweries on a Monday morning. Surabhi.
Hi, thanks for that. So United Breweries will be in focus today, and that is because the NCLAT has upheld the Competition Commission's decision of imposing a penalty of close to 752 crores. CCI had earlier found that the company was engaged in price coordination in the beer market and had imposed a penalty for the same. The company will evaluate this filing for further appeal against the judgment before the Supreme Court. But for now, there's a negative news flow for United Breweries.
Okay, back to Ekta, and there's news flow on Alchem. Ekta, over to you.
Well, yes, they will be selling 8% in their subsidiary Enzyme Bio for 161 crores. They are selling it to 8 Road Ventures and F Prime Capital. Now, remember, the FY22 revenue for this particular arm was around 87.2 crores. They do manufacture or are within the biosimilars plus biologics contract manufacturing segment, and hence it should be positive news for Alchem. Expect the stock to be in the green.
All right, thanks a lot for that. Well, there's some news flow in the real estate space as well. Godrej Properties on our radar. Sonal has the latest. Sonal, over to you.
Good morning, Sonia. Well, yes, Godrej Properties in focus. Company has entered into joint venture with Nilkamal Realtors Private Limited, which is a group company of DB Realty. The project will be developed via a special purpose vehicle where Godrej will hold 50.01% stake, Nilkamal will hold 49.99% stake, and also the consideration received for this 49.99% stake is just 5,000 rupees. DB Realty, remember, is the company where Godrej had earlier announced an investment, but they had taken it off, but they had not ruled out any sort of joint development with the company, and now they have gone ahead with it. Additionally, the news just came by that the company, that is Godrej Properties, will be acquiring a 62 acres of land in Kurukshetra project and will offer 1.4 million square feet of plotted residential development. So 2 sets of news, and that's why Godrej Properties will be in focus.
Okay, thanks for that. Well, Mangalam's watching out for Quest Corp and a couple of other stocks. Mangalam, what are you looking at?
Yes, for Quest Corp, I see a mild negative, so to say, because the company has gone ahead and withdrawn the scheme of amalgamation of Allsec Technologies with themselves. Remember, Allsec Technologies is held entirely by one of their subsidiaries. So the company said that when they merge, they would see some synergies between these two businesses. The fact that they haven't done that is negative news. On Friday as well, we saw Quest Corp decline by about 4%. So some part of that may perhaps be whiffed out by the street itself. So let's see where that goes. For Restaurant Brands Asia, which was the earlier Burger King India, we see some green primarily because they're launching the iconic US fried chicken brand Popeyes in Indonesia, and the chicken sandwich, of course, is a vertical which is doing extremely well globally. So for them to launch this in Indonesia would only aid their business by a tad.
Okay, well, let's go back to Sonal now. She's also tracking Tata Motors and Shriram FinCorp. Sonal, over to you.
Well, yes, Tata Motors is in focus because Delhi Transport Corporation has signed a definite agreement with Tata Motors subsidiary for operating 1,500 electric buses, and the subsidiary here is TML CV Mobility Solutions, which is the EV arm of the company. For Shriram Finance, they have declared a dividend of 15 rupees per share. That is an interim dividend. The company also says they have reviewed and approved higher amount of periodical resource mobilization plan up to January 31st of 2023. They have also approved issuance of redeemable non-convertible debentures via private placement, and this is up to 35,000 crore rupees, which will be used for business purpose. So these two stocks will be on our radar as well.
All right, thanks very much, Sonal, for that. Now, Welspun Corp and SVJN will be in focus as well. Vivek is standing by to tell us why. Vivek, hi, morning.
Well, good morning. Welspun Corp, some positive news flow coming in there. Now, NCLT Ahmedabad has actually gone ahead and approved the resolution plan that was submitted by the company to take over Syntex Prefab as well as Infra Limited. Now, the entity that will be implementing this particular resolution plan from the Welspun Group would be Big Shot Infra Facilities. Along with that, in another news flow, the company has also commissioned coke oven plant in Gujarat, and this particular plant has a production capacity of a little over 210,000 million tons per annum. Now, coming to SJVN, a significant order win as far as SJVN is concerned, 100 megawatts of wind power project that the company has won via the bidding route, and this bidding was conducted by Solar Energy Corporation of India. The tentative cost of development of this particular project is close to 700 crore.
All right, thanks a lot for that. So many stocks in focus. Here's a quick recap in case you missed out on any of them. Stocks with positive news flow. There's Suven Pharma, Alchem Laboratories, Godrej Properties, Tata Motors, Shriram Finance, Welspun Corp, SJVN and Restaurant Brands Asia. While stocks with negative news flow today, there's United Breweries and Quest Corp. I don't think United Breweries is going to be in the red. I mean, it's the end of the year. It's going to make the most amount of business this week, isn't it?
I guess summer is when they make the most amount of business. Winter is where United Spirits comes in because India is a, what do you call it, the brown liquor market as against the white liquor market.
Yeah, a little early in the day to talk about alcohol. Not really.
Okay, well, let's talk about crude then.
Absolutely. And, liquid still, right? Different kind of liquid.
Fuel still.
Yeah, absolutely. Manisha is joining in to tell us what the action is from the commodity space. Manisha, hi, morning.
Morning, Vishant. Thank you for that. Well, to begin with, the volumes are really slow. The U.S. markets are shut because it's the next day after Christmas, and that fell on Sunday then. But we are looking at the crude oil prices trading in the positive right now. So $83 per barrel on your screens here. Three things to look out for. One is that Russia says that they will cut output by 5 to 7% in response to the G7 price cap. And the Russian Baltic exports could decline by 20% in December on a month-on-month basis. The second is that the large U.S. refineries in Texas and North Dakota are shut due to cold. Gasoline, heating oil, diesel oil prices also have surged anywhere between 4 to 5% on a week-on-week basis because of the winter storm Elliott. 1.5 million barrels per day of refining capacity is shut along the U.S. Gulf Coast as well. So this really has to do with supplies rather than demand, which is supporting the prices right now. There also is a report over the weekend that came in from UBS suggesting that the crude oil prices will move above $100 in 2023. UBS is just an addition to what Bank of America, Citi, Morgan Stanley already have been saying. They all expect crude oil prices in 3 digits back in 2023.
3 digits in 2023 rather. Will be interesting to see where that goes. Thanks a lot for that, Manisha. With that, we take a short break. On the other side, we'll get chatting with Prakash Diwan. He'll join in with some fundamental stock analysis. Later, we'll also connect with Pralay Mondal of CSB Bank to talk about their business outlook going forwards. Welcome back. You're watching us here on Bazaar Morning Call on CNBC-TV18. This morning, the SGX Nifty actually earlier was indicating that the start could be mildly in the positive terrain, but now that has picked up steam, almost 80 points on the upside. But then that also is not particularly great news because every time we've seen a big gap up, that's only resulted in easier selling by those who are looking at resistances on the way up. So let's see how that goes. Friday was a particularly brutal day where we saw the mid-cap index fall almost 1,200 points and 14 stocks declining for every stock that advanced. Prakash Diwan, who's a market expert, joins in for some fundamental stock analysis. Prakash, I hope your Christmas was good. Will Santa be, kind to the bulls towards the end of this year? Is that rally coming in? And in mid-caps, after this sell-off, have you seen any opportunities emerge?
Good morning, Maglam. So I think more than the rally, what we are all now looking for is probably relief in the way the markets sliding down on a slave which is really rapidly finding its way. So, the market has to take a pause somewhere, and I think the numbers tell you that at least FIs have started building up more shorts than longs, which is good news because any upside could probably lead to some sort of a short covering bout. But fundamentally, the market is probably getting better into that or getting into a healthier zone of sorts from a valuation perspective. And remember, we are just around the corner. The result season is around the corner. January, I think, second week, 10th or 12th or something is when things start coming up in terms of earnings. And the market will have some other triggers to look at as well, Mangalam. So my sense is you just have to wait it out for this 1 week, which is going to be extremely critical and volatile. But, the mid caps, the broader markets particularly, are the ones where the froth was quite a bit. And you have more of, look at who's selling. It's probably largely HNIs or, clusters of investors who work on certain stocks or certain sectors or themes. They are the ones who are actually exiting the market, not the FIs as much or the DIs at all. So it's going to be a very good cherry picking time for all of us. The unfortunate part is there's very little activity around this time. So the volumes are a bit deceptive. At times, things fall in such meager volumes that you're really not very sure how long this could last. And that's precisely why everybody's waiting for some sort of a stabilizing or equilibrium. But yeah, there's lots that's emerging, even in the large cap for that matter. I mean, you have the likes of L&T and all, which are looking stronger by the day, given the order book, given the execution, the pace of the execution. I think some of the themes that are emerging, like on the infrastructure side, where the government is likely to spend and have probably one full year of growth. The road sector, for instance, extremely promising. So defense continues to offer you opportunity. Cap goods continue to offer you opportunities, and there will be some specific names which will start looking very, very promising once valuations ease out. So yeah, lots to do in terms of homework. Maybe not buying as yet.
No, got that. Sonia, Mangalam, just one thing. A lot of people said that the fall is due to COVID, right? Because of the government getting very vigilant about COVID, etc. Perhaps it could be possible. We don't know the full extent of what kind of sort of a feeling that it generated, right? Because the government was saying there were meetings being held. The Prime Minister was holding a meeting, and it's possible there is a bit of fear, but I think it's been fairly clear that what the government is doing is basically being vigilant, right? I mean, it's not
proactive.
It's not saying at all. We've had expert after expert, and I think it's an important point to make for retail investor who may be watching. Experts have said that this is nothing like what we've had in 2021 or 2020, etc. So while the risk of spillover from what is happening in China is there, but it's a population which is extremely different in terms of exposure to the virus. We've had many waves of virus. For China, it's wave 2. So I think there's a point to be made, because I think people and I've had conversations even on Saturday and Sunday with market participants, and this COVID thing keeps coming back. That maybe who knows what may happen, right? And that is a fair point. Who knows? No one knows. We'll be wiser in hindsight. But at this stage, given what the government is saying and telling us, etc., it's be vigilant, which is par for the course, but nothing beyond that.
I think it's not as much a health issue as it is an economy problem, right? So if China shuts down for longer, then manufacturing, supply chain, travel, business could be lower than
your point is
absolutely.
If China reverses course, then the spillover from that could happen. But I think the panic here is if here, in India, we will see a repeat of what we saw, maybe lockdown type stuff. I mean, I don't think that we should even go there. I think that's not something to kind of even consider, at least at this stage. So just wanted to make that point. Prakash is, of course, with us. Prakash, so in this correction that we are seeing, what would you wait for prices to get even sweeter, more attractive, or there are things which are already looking that way?
So, good morning, Prashant. So I think, as I said earlier, it's the worrying part is that whatever is happening on very thin volume. So when you're trying to accumulate stocks, given the fact that there's still some residual selling pressure in certain counters, which have been very popular of sorts throughout 2022, you could probably see some selling come again. But what's very interesting is that there are names that are giving you great opportunity from a longer term perspective, and notwithstanding any disruptions because of COVID or because of the China supply issues. let me give you an instance, for example on this. So look at United Spirits. We've seen the stock consolidate so beautifully, right from the 660 zones all the way to 900 plus. It kind of keeps on vacillating between this 890, 900, 870, 900 zones. But the way the channel checks tell you what's happening on the ground in terms of price hikes, in terms of reduction in raw material costs, which was a big issue for them, let's say about 3 months back, whether it was packaging, labels, bottling, everything. Now all that seems to be easing out, and it's got nothing to do with COVID or China, or for that matter anything which could be very long term. So I think it's just sentiment. It's just that somebody needs to get out because of certain positions that they've taken, over leverage or whatever. And that's kind of giving you opportunities to buy these stocks at least 8-10%. And the good stocks, mind you, haven't really fallen beyond 10-12%. It's the ones that were overvalued or were weaker on the fundamentals where that 25-30% cuts have happened in the small cap. So it's distinctly a very clear screen that tells you that it's differentiated the boys from the men, or the men from the boys, whatever way you look at it. It's giving you opportunity to plug into some of the stronger names, and that's what this opportunity should be leveraged on. And this could probably go until Jan. I mean, I think the sell-off could have different reasons, but there will be corrections. There will be a little bit of cut in the froth, given the overvalued zone that we were in. So all that's kind of adding up very well. You just have to be a bit patient to buy into the right stocks. Don't buy everything on day one. Keep on staggering it, keep on picking your stocks, wait for the right levels for them to be attractive enough for you to get it.
Okay, all right. Well, since you were saying, pick the stronger of the lot, let's talk about one of the stronger banks in the banking space. CSB Bank is the first corporate on our radar this morning. The bank has seen a good comeback in gold loans. The gold loan shares have risen, or the share of gold loans has risen to 46% in Q2 versus 39% year on year. In terms of business momentum as well, their deposits and advances saw a rise both year on year and Q on Q. And last time when we spoke to the bank, the management told us that their credit growth will be faster than the entire system over the next 2 to 3 years. Pralay Mondal, who's the MD and CEO at CSB Bank, joins us now for a discussion on how 2023 will shape up for them. Mr. Mondal, good morning and Happy New Year to you and your team at CSB in advance. I want to ask you about what's happening in the gold loan space, because it's made a strong comeback for you. Are bankers taking away the market share from NBFCs? Because that seems to be a very strong narrative. But you tell us, how is the situation on the ground and what kind of growth are you expecting?
Good morning, Sonia, and good morning to all your viewers, and a very, very happy New Year ahead.
Sure, thank you.
Yes, I think gold loan has been a strong growth area for us. You could see in the last 2 quarters we have done well. Also, the entire LTV issue which was there last year has been settled reasonably well. And this is a good business to be in. We don't need no risk weights on this. The NPA is almost close to zero. So, and our operating cost is pretty much baked in. So to that extent, it's a good business to be in. We are doing well. Coming to the market share shift, I think there's a large market for everybody to address. But the segment which we look at is slightly more premium compared to some of the NBFCs which you look at it. Our interest levels are much lower. And to that extent, we address a different segment. But obviously, there will always be a 20-30% overlap, and maybe some amount of market share shift could be happening there because of probably service, pricing, and better network. So broadly, I think it has been a good last 6 to 9 months for us in the gold loans.
Right. Take your point on the gold loan bit. But, as far as the MSME, SME loans are concerned, from a long-term standpoint, you said that will be the one that will drive business for you going forward. And this obviously was a low-hanging fruit that you guys, gained some market share in. And going forward, there may be some shift in the market share. In terms of MSME and SME, have you turned cautious? What are your thoughts there?
Yeah, I think what I said, Mangalam, last time also is MSME, the pricing of the risk was not happening to the extent we would like to have in the market. But now I think with the interest rate cycle almost peaking and rates being more rational, you will see us getting a little more aggressive on the SME side now onwards, maybe this quarter, next quarter, and going ahead in the next year. Also, we have our old vintage runoff portfolio, which is also playing its part. But we have clearly created a good coverage across the country. a good team, and we are also looking at using technology in the small SME loans. We have good coverage, and I think overall the credit process is also improved. So I think going ahead with the GDP looking reasonably okay, and with the interest rate cycle hopefully picking in another quarter or so, we should be able to see a good growth in the SME segment.
Right. Pralay, hi, good morning. You know, a broker, Kotak Equities, writes this morning in a note to their clients, and I'm going to just read the first line out. Our channel checks and conversations with various apparel, consumer durables, paints and QSR companies suggests a sharp drop in discretionary demand in the past few weeks. Are you seeing that in your lending businesses at all in any way?
See, we are coming off kind of a festive season, Prashant. So a little bit of a drop on a month-on-month basis is obviously expected. Even if you look at the two-wheelers and some of the auto side of the business is also sort of not grown as much as we had expected at an industry level. Also, the interest rate cycles are going up, and hence the EMI pinch on the portfolio or on the cars will be there. So to that extent, we have to wait it out how it works out, because as you know, 50% of the retail is home loans in the system, home loans and LAP, and that's where there has been a rise in interest rate, which impacts the overall EMI payout of the consumers. But the good news is job, salary rise, and all these are intact. And I was reading that report from one of these brokers, and they're saying that credit to GDP in India is expected to go up from a current level to almost 100% in the next few years. So given that perspective, I think there's a little bit of a blip maybe here and there because of the interest rate cycle with some of this news around COVID around the world, China, etc., is impacting. But eventually, I think the long-term story is positive, and things are going to pick up on the retail side as well. I have no doubt about it.
All right, Mr. Mondal, we leave it at that. Have a great 2023, and thank you for giving us a quick take on the business, and all the best with the year ahead.
Yes, sir.
Okay, that's Pralay Mondal of CSB. But let's go back to Prakash Diwan for a quick take. Prakash, your thoughts on what the management had to say? They're looking at outsized growth versus the industry over the next 2 to 3 years, and they're quite optimistic overall. This and other banks, what would your top pick be? Because now we're heading into banking earnings as well. You have HDFC, ICICI Bank coming up first fortnight of January. What are you looking at?
So Sonia, I think what the bank management shared, I think that goes for quite a few of these small banks which are very clearly focused on niche segments which are growing much faster than the average growth rate. And remember, gold loans is something which has a very cyclical nature. So right now, if they're riding that wave of growth, it's going to last for some time for them. So that's great. And then they've done enough to repair the balance sheet and all. But from a scale perspective, it's still very narrow. I would still look at something like within the smaller banks, look at a largest small bank like Federal. I think it offers great opportunity to straddle across various segments and has the ability to start focusing on what is working for them. So the ROAs have improved dramatically, been very high for quite some time now. There's continuity in terms of whatever the strategies they've used to go to market, and that's very important for any bank in this thing. So I believe banks still have a great phase of growth ahead of them. There's no doubting the fact that there's been some correction in some of these names, but that's largely been on the PSU sides, and there's too much froth there. People have bought into low price banks like Central Bank and Punjab and Sind Bank, and all of those, because they're low price, people tend to kind of move to in the last phase of a FOMO wave. But stick to the well-known banks, the well-discovered banks. I think they'll still deliver. And of course, don't forget the SBIs of the world. That's the caveat. But from the smallest banks, I think I would definitely put a lot of faith in what Federal Bank can deliver from here on.
All right, Prakash, thank you so much for joining in and giving us all the details, your views on the market.
Okay, welcome back. We got the SGX, which is indicating a 0.5% higher start, 85, 86 points. But what selling we've seen over the last 2 days, just absolutely one-wayish. Mitesh Thakkar of earningswave.com and Sudarshan Sukhani of Technical Trends is joining us for some trading ideas and just setups, which I think is very important this morning. Gentlemen, good morning. Good to have both of you here. Sudarshan, to you first. How are things looking? Should we expect any bit of stability, or you think it could be one-sided once again?
Good morning, Vishal. See, it's too early to talk of stability. On Friday, we had a very, let's say, significant decline. So half an hour of SGX does not actually change the trend. What we can expect today is that there may be some kind of short covering, and short covering sometimes leads to decent rallies because it becomes cascading effect. There is short covering, prices go up, so there is more short covering. But that's about all. I do not think that today or in the near future we are going to see a change of trend. We are in a correction of some kind. Till this correction doesn't end, till we don't start building a base, we just have to assume that the markets are slowly and steadily going to go down. So for today, take an intraday trade on the long side with some intraday tools at your disposal, not blindly. Maybe use a moving average, maybe use higher highs, higher lows, some technical tool, and expect some profits because of a short covering rally, but exit today, don't carry the positions tomorrow. And the same applies to the Bank Nifty.
All right, so exit your positions today, don't carry them tomorrow. There is a lot of caution in the system still. Mitesh Thakkar is also with us. Mitesh, do you think the 200-day moving average of 17,180 thereabouts, is it something that can hold? Or do you think it's just a matter of time that the market gives up on that? And how do you approach trade today?
Good morning. I think that's a level very far off from here, but it's not that I have not considered that the markets will eventually test it. I think there is a fair possibility. What has happened in the last few days is that the indicator setup on the weekly charts is slightly, turning on the negative side. And if that actually plays out, then I think there's a good chance that we will see this correction go deeper. But for the time being, I think, I would look at possibly levels of around 17,720 and then 17,500, 450 zone as the key support areas. So I think we will eventually test those levels. You may get a day or two of pullback. So the idea is that we will be positioned more on the selling side. And I think I talked about this on Friday that we'll cut our short positions and then wait for a bounce back to about 18,000, 18,050 zones. That's where I think I would be aggressively shorting again. And as I said, I think, the targets on the downside would be 17,720 and then eventually 17,500, 450 zones is what I'm looking at.
Do your stocks reflect the shorting positions that you have right now as well? I mean, what do you have in terms of individual stocks, Mitesh?
Again, today is a mix of buys and sells purely because one, I think there could be a bounce back. SGX also starting slightly positive, and some stocks have come on support area. So I have 2 buys and 2 sells. It's a very neutral kind of an outlook on the stock selection side. Britannia has hit support level, so that's a buy with a stop at 4,300 for targets of 4,400, and ONGC is a buy as well with a stop at 138 for a bounce back to about levels of 144. On the selling side is FSN on mild pullback, sell with a stop at 101 for targets of 91, and India Mart is a sell with a stop at 4,200 for a slightly positional target of 3,900.
And Sudarshan, how about you? What would be your top buys and sell calls today? I mean, is it largely on the sell side?
No, because I'm expecting some kind of relief rally and we are looking at very short-term intraday trades, largely on the buy side. HCL Tech is a buy. Very surprising because the stock has actually been consolidating while that carnage in IT was going on and then in the Nifty also. So clearly there is some relative strength here. Buy with a stop under 1,020. Another buy on dips opportunity, and this is a relatively large risk trade, but worth looking is Titan. Titan has been falling consistently. Now it has stopped falling. That's all we can say for it, but it's a good quality stock. Consider buying it with a stop under 24.50. Crompton is an intraday short. The stock has been weak for some weeks now. Consider an intraday short with a stop above 352. And Alchem Labs is again a buy, again a stock that has outperformed in the recent days. Buy with a stop under 3,000. Keep these trades intraday. Don't go overboard.
Gentlemen, thanks very much, both of you, and we'll keep coming back to you for more because, I mean, this is very much, the top story is markets and what happens from here on after what we saw last 2 days. But this big deal which has been announced, Advent, which is a private equity firm, has confirmed buying a significant stake in Suven Pharma. There's an open offer coming as well to acquire an additional 26% stake in Suven. Venkat Jasti, CMD of Suven Pharma, is joining us right now. Mr. Jasti, thanks very much for your time. Good to have you with us here. Interview after interview, we've asked you this question, and you obviously, I'm assuming, could not tell us. It's not happened till it happens, right? So now it's happened. But can you tell us what is the significant stake? How much?
I mean, eventually the Advent has to get the controlling stake. That's what the after the 26% open offer they will launch. That's what the intent is all about.
Mr. Justy.
So the maximum will be diluting is around 50%.
Okay, so just to confirm the details of the deal, the Justy family, the promoter holding, y'all will be selling 50% stake, which would be at around 495 rupees per share. So y'all will be netting around 6,300 odd crores from this particular deal?
Yes, in the same range, yes.
Okay. What is the plan for you in particular after this deal is done, Mr. Justy? Because you have run the company very successfully. Margins have been over 40%. There's been 20% CAGR in the past couple of years. So there is this uncertainty and maybe some anxiety that you might not continue and there could be some disruptions in terms of the control. So give us a sense in terms of what the plans would be for Suven Pharma post this merger.
The answer is in your question itself. I mean, we are running this very tight ship and in a passionate manner. And as you know, we've been telling that we are looking for a strategic partnership. But this thing is a combination of strategic partnership along with the financial partnership. The value creation has to be more. And the commitment and the things what we do in terms of the commitment to customers and the passion with which we do the things and the focus of the business will remain as same. And as a matter of fact, the other platform which they possess will eventually be a part of this so that we can offer better things. And since our management style only they like it, that's why, and we are continuing to do the same thing. There will not be any change, business as usual. I'll be running this thing. Only thing is, as you know, every time you're asking succession and also the management bandwidth. With this, the management bandwidth will be again a big positive for us. Along with, they can also bring in additional opportunities. So we can become a real big player, and we continue to run this as usual. There is no second thoughts about it. That's the way it is going to be.
Sure. Mr. Justy, morning. Just to take Ekta's point forward, I mean, you've run this business for so long. What will your exact role be post this deal, and what was the primary reason for the stake sale?
The primary reason is, I mean, as I said, we are not able to bring in the succession in plan. So there is so much time, maybe 5, 6, 7 years only, I can be actively doing this thing. So we need to plan properly. And also at the same time, we need to increase the value to ourselves and to the shareholders. And this is an opportunity where this is strategic financial investment has come. That is the reason why we have taken this opportunity. Because with the it will be EPS accretive and it will double the revenue when the platforms merge into Suven, and Suven continue to run this way.
You said there's no succession plan for this business, but you also have, Suven Life. What plans for that? With the money that you raise here, will you invest a large part of that in Suven Life? What is the plan for that business? You recently raised 400 crore via rights issue there.
Yes, again, the same thing. I mean, we have already raised the money for the next 3 years. It's not the money is the one that's the reason why we sold this company. This is the reason why we sold this company is because of the value creation it will create eventually, and also the management bandwidth that will come into the picture, all those things. But for Suven Life Sciences, for the next 2.5 years, there is no money requirement is there. And also, there is a possibility some milestone may accrue within the next 1 year. And if that happens, there is no need. But if not, as you know, we have to fund without this or with that, doesn't matter. We keep funding it. The last time I said, we'll keep funding that one. That's not the reason why we sold this company.
Okay. Mr. Justy, just a quick, one of the last questions. Cohance is basically Advent's arm, and eventually they will consider a merger of Suven Pharma with Cohance. The fear is that that could be margin dilutive. So could you just allay fears by giving us a sense in terms of what Cohance's margins might be on a blended basis? And once the two companies do come together, what would the margins look like on a consolidated basis?
Actually, this will be run as is for now, and I have no idea what the Cohen's numbers are going to be. But the thing is that when some of the things that are not there, either in capacity or in values, those things can be taken from the Cohen's platform and offered to our customers. So as far as the Suven is concerned, there will not be any dilution in the earnings, but when it comes maybe 2 years from now, whatever, that we'll know. But right now, I cannot comment on things which I don't know fully.
Okay, Mr. Jasti, we had more questions, but we will perhaps save that for a later date. Thank you for giving us a quick take on this stake sale, and all the best for the future. That is Suven Pharma saying that they were unable to put a succession plan in place, hence the right thing to do was to do the stake sale, and they also talk about how Advent International will eventually get controlling stake, and a maximum of 50% of promoter stake will be diluted by Suven. Thanks a lot, Ekta, for joining in as well for the discussion. Let's take a quick break. On the other side, we'll have the